All right, everyone. It is Wednesday, January 24th, 2024, and we are here today to talk about financial modeling and why financial modeling is important for running your small or medium business or startup venture. And we got some tips and strategies for you today, and we're super excited to share them with you. So if you go ahead to the next slide. My name is Larry Bernstein. I am a co-founder and CEO here at Proseer. We are a CPA firm based in South Florida, but with team members across the world. We're a virtual team. My strengths are in tax planning and advisory, but also is creating really awesome accounting systems from the technology that's involved to automation and the actual accounting part too, of course. The part that's probably less fun for most of everybody, but we make sure we get really great accounting. But what's really cool, and one of the reasons that I think Jeff is here to talk to us all today is about how financial planning and ties back in to accounting and into reporting. So it's my pleasure today to introduce Jeff Rudner, my co-founder and COO of the firm. Jeff is an expert in financial planning and analysis. And for those of you who don't know what FP&A is, or financial planning and analysis, effectively it's a fancy word for budgeting and forecasting. Okay, so every company really should have a budget or a forecast or even a financial model that turns into those things. And that's what FP&A is in industry speak. So we'll go ahead on to the next slide here, and then Jeff will have an opportunity to start telling you all about the great things that he knows and wants to share with you all today about financial planning and budgeting and forecasting.
Optimum. Before we get into the slides, thanks so much, Larry. Today we're talking about one aspect of financial planning and analysis, and that is the first two words, financial planning, which is going to be codified in the model, which we'll go through, but it also flows through the analysis. Have a lot of time at the end to talk through the analysis, the foundation of reviewing your business's performance and also setting your strategy is what encompasses FP&A, financial planning and analysis. Today, we're just focusing on the first two aspects, which are forecasting, modeling, financial planning. So let's dive in.
So Jeff, why don't you go ahead and tell everybody the basics? What is financial modeling?
Awesome. So a financial model is a codification, or it is a spreadsheet, or it's a document that summarizes a business's plan. It summarizes their strategy and it helps them explain to stakeholders, whether that's insiders or external parties, investors, lenders, your friends and family, what your business does, how it makes money, and how it's going to succeed in the future. The process of financial modeling is defining the strategy of the business, defining the goals, and then also recognizing and calculating the inputs that are necessary to get there. So all these things come together and are summarized in a document that we call the financial model, forecast, budget. All these are similar or synonyms, but it's a way of telling your business story through numbers. And so go through today is how do we actually go through that process? And then the result is the model that is used to track performance, to communicate to the stakeholders, as we mentioned. All these things are included in the financial model. So there,
Why
yeah.
do we use a model, Jeff?
So there's a lot of reasons why we should use a financial model from a strategic finance aspect. It is the way that you communicate to financial minded people, how your business is going to perform, how you expect it to perform, what the goals are for your business, and what those inputs are necessary are for you to achieve them. Larry, from the accounting standpoint, there's a lot more that you can speak to in how that's codified in the accounting system. So maybe you take a little bit here, say how you see it from an accounting standpoint. Why would you use the financial model?
So really, we go one step past the model, which is the output of it, which is a budget. It could be an annual budget. It could be a multi-year budget, but effectively what it is a plan that says for marketing, we're going to spend $5,000 a month, right? Or we're going to, or what we're going to plan to do. We're going to plan to hire somebody in the second quarter of next year. And we have a budget for that person of this much money. And what we do is we want to, of course, load those budgets into the accounting system so that then we can do reporting what actually happened versus the budget and see the variance to see how close we are to plan. But the other side of that is it allows decision makers or managers, like middle management, to make decisions about what they can and can't do without needing tremendous amounts of approvals because this budget has already been approved. So if you ask, hey, can I spend this money? Well, if it's in budget, then yes. And if it's not, then maybe you need second sets of approvals.
That's right. And for many of our clients that we work with, they utilize the budget to actually pre-approve spend. They don't want their team members to have to come to them every month or every time there's a decision that needs to be made on spending. It's it's pre-approved at the beginning of the year, how much they have to allocate into whatever buckets, whether that's sales and marketing, whether that's paid media, whether that's hiring a new team member, as Larry mentioned. All that's predefined in your having alignment of your team beginning to make sure everyone's rowing in the same direction to accomplish one or multiple common goals. And everyone's empowered to make those decisions through things that have been codified. So we're going to go through how to build a financial model. We're going to go step by step, and then we're going to actually go through a sample model that we built and utilized through many clients. So the first step, regardless of whether you are a startup looking to build out your strategy or to communicate to investors, or you are a real estate company that is looking to get a loan on a building, or if you are just a regular small business or medium-sized business that has had success or is looking to achieve their strategy and just build out their budget for the year. First step is always to define your North Star goal. We call it North Star goal. It's something that's out in the future. It's defined and it's time defined. So you're setting a specific time base. So if you're a business, typically 12 months. If you're a startup looking for funding, you might need to put together a 3 or 5 year budget to set your expectations. And you set that North Star goal that everybody in the entire company is going to rally around. So it might be the number of customers you're trying to accomplish if you're still trying to find product market fit. It could be a revenue target, a growth target. It could be any number of types of goals that you have internally, but you want to make sure that everyone in the company is aligned on them. So Larry, any thoughts on North Star goals when it comes to accounting and building that budget, how that actually comes into play?
I mean,
Typically,
I think
yeah,
it's still just going to align you back to having the team aligned to the plan and then helping with then driving accountability between your leadership team, yourself as an owner, if you're a small business, or by department heads or managers. You want to have them know what the plan is, or just you, if it's a small business, you know what your plan is. So then when you actually take a look at your financials, you're not just saying, how did I do this month? It's how did I do this month versus last year or versus last period? And how did I do this month versus budget or whatever
mhm.
time periods you want to look at, whether it's quarters or years or whatever it might be.
Yep. Yeah, absolutely. And so, the North Star goal is kind of that one point. It's that one data point that you're going to use in all the conversations you have with all your stakeholders internally or externally. Like, hey, we want to have 1,000 customers by year end. We want to grow revenue by 5% this year. We want to reach a $2 million run rate. Whatever it is for your business, it should be one number, should be time defined, and should be easily tracked. So once we have that North Star goal, the next thing we do is we start to work backwards from that and we start to build out our revenue forecast. We prefer to do it month by month. Some companies might like to do it quarterly if that's easier for them, but building up how you're going to grow into achieving that North Star goal. Go to our scenario in a minute, but breaking it down month by month, what are your revenue targets going to be on a dollars amount? And then also as granularly as how many sales you need to make in order to hit those revenue targets to achieve that goal. Larry, anything before we move on?
No, you get it. Let's go.
Awesome. So we're moving down the P&L statement, the profit and loss statement in our forecast. And once we have our revenue targets, then we're going to go through what are the inputs necessary to achieve those revenue goals. I wish there were a business out there that could have revenue without any cost associated with it, but unfortunately, I haven't found one yet. every business is going to have costs associated with supporting that revenue. Now, there are different types of costs and where we put them in the financial statements. If there are costs that are directly associated with supporting that revenue or on sale, then that'll be cost of goods sold. And cost of goods sold is important because those two metrics, revenue minus cost of goods sold, gives us our gross profit or gross margin, which tells us how much money we have to support the rest of the business. And so if you're a perfect example of so the question always comes up is what should be included in cost of goods? These are the direct costs specifically related to the sale. If you sell t-shirts, then the cost of goods sold will be how much it costs you to buy that t-shirt. So if you sell t-shirts for $15 and you bought the t-shirt for $10, your cost of goods sold is 10, your gross profit is $5. This tells you how much your is available for all the other things that are in the business, which are called operating expenses. And so depending on what kind of business you're in, gross profit can be very, if you're a software business, then typical targets are as close to 100% as possible. 70 to 50% isn't unreasonable if you're a software. If you're heavy on manufacturing or heavy and intense in industries that require a lot of labor, maybe your margins are lower and you're more volume based. So really depending on the industry that you're in and what is necessary to support your revenue will determine what you expect in terms of gross profit. Then the other non-direct related expenses. So these are things that I'm also doing as well. So if you have an office, doesn't really relate to a specific sale, it relates to supporting all your sales. If you have a back office team, if you have internet, what else? Insurance, other utilities, travel. These are things that are related to growing your business, but they're not related to a specific sale. These are inputs that are necessary to reach your revenue targets and to reach your North Star. Maybe you have to, maybe you have to invest in sales and marketing. Maybe you have to maybe you have to attend conferences. These are things that don't relate to a specific sale, but relate to growing your revenue base and achieving that external goal. But put these all below the line. You just don't connect to a specific sale. So these are the inputs necessary for achieving. Anything else before we move on?
There's a lot to it.
On to it. So we'll dive into the minute. So revenue minus cost of goods sold equals your gross profit. Then we take our operating expenses from our gross profit, and that gives us our net income or total profit for the business. This is how much is available theoretically to be utilized to be distributed to investors, to pay down debt, to reinvest into the business, to continue to grow. The higher the profit, typically the better the business is, as long as it relates to cash or can be translated to cash. And so these are the big metrics that are included in the model, which we'll go through in a minute. But everyone's going to ask for businesses that are stable. They typically would expect to have a profit, a positive profit. However, if you're a startup and you're investing a lot in hiring team in preparation for future growth, you're probably going to have negative profit, and that might be okay. Depending on the business you're in, it might be okay to have negative profit, or as long as you plan for it. As long as you think in the future, you might be able to get to profitability. So depending on the business, depending on where you are in the cycle or in your life cycle, you might have profit, you might not, but that's why it's important to do this exercise to set your expectations and track your progress. All right. So Larry, this is one that I think might be good for you to talk about. When we codified the financial model, we really want to tell the story and sell the story. So can you say a little bit about this?
At the end of the day, whenever you're running a business, you either need to know what you're trying to do yourself as a small business owner. In a medium business, you need to know what you're doing yourself, maybe with your leadership team and with your employees. And if it's in a startup, we do work with a number of venture funded startups who are raising money from outside investors and trying to sell their own employees on the vision, because oftentimes in startups, those people will come to work for less money in exchange for equity or potential for future growth. It's really important that you have a plan. I mean, that plan can change, but that today you have a plan. That plan is typically an idea. Okay, well, now let's take that idea and let's turn it into hard numbers, whether it's customer counts, employee head counts that we're going to need to support those many customers, what our pricing for our products or services are going to be. Put all this together so then we can make a plan about how we're going to get to that, what Jeff called the North Star goal, right? Align and rally everybody behind, or that we're getting our investors to get behind us for, or even a bank, right? Maybe a bank is your investor effectively as a lender, getting them behind that goal, right? And then to tell or sell, depending how you want to look at it, your story so that everybody can understand what is you're trying to do. And then when you take a look backward after maybe the year or whatever period you're measuring, you can say, hey, how close were we to that story? Did did we meet it? Did we beat it? Did we miss by a lot or did we pivot? Like what happened? And so having this written down can really make a big difference for helping keep all those people and plans aligned because memories are short, at least mine is.
Know it well. So when we talk about the model again in context of communication of the business and how we talk about the business, it's the codification of your story in numbers. So if you're working with investors, you're working with lenders, they're going to ask for a budget or a financial model because they want to make sure they can get paid back, or they want to make sure they want to understand what the potential ultimate valuation for this business is, and do they believe it? And so it's really important to put a lot of time and thought into your model. So that way you are putting together something that's realistic, something that you're confident when you speak to, and telling your story, or you're selling your story, as Larry mentioned, to employees or investors, that you're confident you can hit, and you're going to be able to be proud of the results. So with that, we're just going to dive into our next slide is actually a case study. So I'm going to start sharing my screen with a model. So let me get to that.
So while Jeff's getting ready here, what he's going to do, he's going to pull up an Excel document. And this Excel doc is the model, or at least the framework usually for the model that we use for our clients. And he's going to talk to you a little bit about drivers and what a driver is, and then show you how this whole thing kind of works over time. So, Jeff, if you're ready, you can go ahead and get that started.
Awesome. I'm ready. Now, before we get into it, just want to kind of set the stage. This company is a theoretical company. We're calling it for purposes NewCo. This is a software company that has a North Star goal of 1,000 customers by end of the year 2026. So they've had a strategy session, they've all aligned, and they've talked about their North Star goal. They set it with their leadership team that they want to hit 1,000 customers by 2026. Then that North Star goal comes and trickles down to the finance team, and it's the finance team's responsibility, to the finance team and the founding team, to talk about how it works with inputs of the rest of the leadership team. So I'm going to share my screen now. I'll talk about it in a little bit more detail. Can everyone see?
Yep.
Very decent. Awesome. All right. So the model, we use Excel. There's many tools out there to build financial models and manage them. We find Excel to be the most flexible, but there's plenty of other solutions out there that could do similar things and might suit your needs better. But for purposes of this conversation, we're using Excel. So as mentioned, the purpose of the general idea for this budget is it's a profit and loss statement. There's forecasts out there that go a little bit deeper, that have 3 statement forecasts with profit and loss, balance sheet, and cash flow statement. For purposes of this exercise, we mostly focus on the profit and loss, but we also summarize towards cash at the bottom. So this is just a scenario we're utilizing, but we know that there's many ways to approach this exercise, and also that the needs of the business and the needs of the stakeholders to see this information might differ. So you might need to put in a balance sheet, need to show more details on the cash flow, but for purposes of this exercise, we're just focusing on the P&L and cash. So this business, what we've done is the structure of this file is a profit and loss statement with every column is a month. So we're starting January 2024. Every column's a month. And then scrolling down, this is the profit and loss statement, starting with revenue. Then we go to cost of revenue. We'll go into the drivers in a second, operating expenses, and then summary to cash at the bottom. So we've laid it out with a typical cash flow, typical profit and loss statement. We've also gone month to month all the way to 2026 because the North Star goal was 1,000 customers. We want to make sure that was the first thing that we did. So we want to make sure that we achieve that. So there's a couple ways to do that. You can start there and work back, or you can build assumptions on what you think you're going to do in terms of growth. And if you hit it. So what we've done is the couple drivers for revenue that you need to focus on is how many customers or how many sales do you have? Are you going to have for what period? And then what's the price of those sales? So in this company has three products. They have product one, service type one, or service type two. And each of those has a different growth trajectory. So they said that they're going to start with two customers in February 2024. Then instead of projecting specific customer numbers, what we've done is they thought that they would grow 25% a month through the end of through the end of 2024, after which they would grow 20% month over month, followed by 15%. And you can see in this file, each of these products or services has their own growth trajectory, which designates how many sales they're going to be selling. Then we have the amount, the cost that they're going to charge for each revenue type. So for SaaS product one, they're going to charge $250 per month, service type one, 75, and service type two. And multiplying the number of sales times the price gets you the revenue for each of those revenue lines per month for the entire projection. There are some additional metrics that you can think about depending on what business you're in that are based on the revenue numbers. So something might be one of the common metrics is monthly recurring revenue. The other one is annual recurring revenue. And we use the numbers in this forecast to calculate. But for purposes of this exercise, we're just trying to get to what our revenue will be by month through the end of 2026. After that, we get into our costs. What are our costs associated with supporting these revenue numbers? In this purpose, what we did is the drivers of our costs. We said that for SaaS COGS, that it's going to cost us 75% of the revenue numbers to support this. But we'd be able to support 3 users per group. And so this is a little bit more of a complex calculation. If you're just starting out, you're just perfectly okay to say each sale is going to cost a few dollars, or it really just depends on what your specific input is. But you're going to input the cost per sale, and then we're going to multiply that by the number of sales to get your gross margin. So we have our drivers in this model. Our drivers for model hygiene. What we do is we want to color code it so we know where the formulas are or where the inputs are. So I've highlighted the inputs in beige, so you can see the beige, and each of these goes into calculating what the corresponding metric is. So we project our COGS, and then we get to gross profit number, and then our gross profit divided by revenue gets our gross profit. So we'll stop there for a second. Larry, any thoughts or questions on this topic before we get down to the next section of the P&L?
Yeah, I think, this is obviously talking about a SaaS business, but this type of model can be adjusted for any type of business, whether it's professional service business, brokerage business, a residential rental real estate business with many units. Like it could all be adjusted to try to figure out, and customize for your business type. Another thing to think about in any business is churn. So when you're thinking about your revenue growth here, you're going to want to think about your net revenue growth. And it's also possible that you may even have a down month or a down period. And so it doesn't always, this model looks really rosy, right? Everything is just like up and to the right. But in reality, that's wonderful if it happens. But in reality, typically there's going to be something that's going to be more realistic that may not happen just like this. or perhaps revenue will stabilize and where customers will kind of plateau. And then you'll need to, Jeff will talk about it in a minute in OpEx. The only way to support more customers at a certain point will be to add a whole bunch more support, like maybe more people or R&D technology investment or whatever it might be. So
That's
anyway,
right.
go ahead and continue.
That's a great point. And so the main thing that we like to communicate is, and as we'll go through the rest of this in a second, is it's not as much, this exercise is as much as a process as it is the, so the conversations that we have, the conversations you have with your leadership team in building this really, really create a lot of business because it defines the strategy and it aligns your team. So we'll
Let's
continue
dig
to,
into that. Let's dig into that a little bit more. Aligning your team, I think, is really critical. And I think some people might think that when you're doing a financial forecast or building a budget like this, it's really something you just like hand off to an outside consultant like us or to your internal finance director, your CFO, or whatever it might be, and have them just do it by themselves in a room. But the reality is they can't. I mean, they can do that after they've collected all the information, everything has been aligned, and then come back and review it. But what happens and what our experience has been is when you go through this process and you get everybody in a room or in a Zoom call or whatever it might be, different people are going to have different expectations or ideas about what they think it is. So the process, like you mentioned, of talking through this, especially with different disciplines, like maybe the marketing team and the sales team, and this might all be you as one person, as an entrepreneur, or maybe in a bigger business, they're separate people, but is it like to be able to add 10 customers a month? What does that mean for marketing? And does the marketing function of your business have what it needs to support it? Is that practical? Right? Does our operations team, the people who actually do this work, or our technology team, or the servers that we have, whatever it's going to be, can that really be practically true? Um, and so the reality is when you get everyone to think about this, some people will say, I can't do it. Or if I need to do that, then I need these things and we'll need RAM time of this long. And it's a lot more than just numbers on a spreadsheet. The numbers on the spreadsheet are the result.
that's right. Yeah. It's just a summary of the action point. All right. So scrolling down, once we get gross profit, then we talk about OpEx. We talk about the overhead, the things that are not directly related to sales that support these revenue goals. So the big one for any business is personnel. And for this model, we actually have a specific tab, separate tab for personnel where we break down the payroll by team. So maybe you have admin, you have tech and product, you have operations, sales and marketing. If you're a manufacturer, you might have a manufacturing team. If you have your professional services, you'll have more professional staff. This is just the payroll we put together. And so each of what the inputs necessary for payroll are, where are you going to be hiring? When are you going to be hiring them? And how much will you be paying them? What will they be, will their salary? And so we input for each of these departments, the team member, we have CEO and COO, the start dates. And as you can see, this section, the columns to the right match the timelines of the months of the model previous, the general model, the P&L model. And so this actually gets input and summarized into a line in the profit and loss statement. But because it's a really important input, we model it separately. So you can see, for example, for tech and product, we have different start dates. And for each of these start dates, as they come online, that's when the salary starts hitting the P&L. And so we can toggle this. If you go through this and one team says, hey, we're going to have this app developer start in June of 2024. And then you talk to the CTO or you talk to your head of tech and say, you know what, actually, we're not going to need that. We're going to push it back. You can push it back. So whenever they said it'd be September 1st, 2024, you can see the model just responds to that and you don't incur those costs until the period starts. So for each of these roles, you can see we have the start date, we have the role, and we have the salaries. And then we summarize it here at the bottom. What are the total salaries per month and what's the total count? Because those are our drivers, or those numbers are our inputs into other lines down the P&L, which we'll see this. So we take these numbers, we get to the P&L, and you can see the numbers that we just looked at, the wages and the count, our inputs here. The count doesn't have an impact on the P&L numbers. It's just an input which we'll use in the model. But the wages is important. We have benefits, which in this case, we're saying $500 per employee per month. Payroll taxes, which depend on the state you're in, the country you're in, and then payroll processing. If you have a company that's processing your payroll, you'll likely have a monthly charge. And so in this scenario, we built on all those based on per employee per month charges. So the number of employees, where the wages come into play into these costs. We summarize it by total personnel line, because we're in details here, but we'll see in a second when we're sending financials externally, we might want to summarize that so as to not confuse people with too much information. Following personnel, we project sales and marketing. And so for sales and marketing, in this scenario, we projected it by month and for the corresponding year. So we said in 2024, we're going to have a $5,000 per month marketing budget. We'll have a $10,000 per marketing budget in 2025, and 2026 will be $25,000. So we're going to continuously invest accounting and legal. This maybe you start off with just a general bookkeeper before you raise funds, but you can do a similar exercise with paid media where you change it by year. Legal fees are inputs as well into operating expenses. Recruiting. So as you hire new employees, you might incur recruiting costs. They need to pay additional to attract those new employees. You need a service to help you find them to save you time and get you high quality employees. You might want to build in a budget for that. Bank charges, insurance. If there's any dues or subscriptions, travel and entertainment. You want to think about that. Do you need to include that in order to attract new revenue sources? That gets you total finance, legal, G&A, general and administrative. Then we have office expense, telecommunications. And then you can see what we've done is, for the purpose of this model, we've kind of kept costs relatively consistent if they're not driven by a change in employees. Telecommunications is a phone. So if you have more employees, theoretically, you would have more costs for telecom. Software and subscriptions, we did this on a per employee basis. And the same thing with computers, we model $3,000 per new employee. So those are the general back office expenses, the OpEx that we included. We summarize that at the bottom with total, but each of these sections is collapsible in this model. So you can see it on a granular basis or summarized basis to get to net income. And for purposes of this exercise, we've used net income as a proxy of cash flow. Most of these expenses in here are monthly expenses. You're going to be incurring them on a monthly basis, and you'll be paying for them on a monthly basis. We haven't really considered too much of an accrual scenario, whether that's revenue or costs. We're just assuming for this scenario that every sale is a monthly sale and cash is collected monthly, and payments for operating expenses go out on a monthly basis to get to a net cash balance. So to further summarize this, to show how this profit and loss, or this scenario, results in cash and the impact on the scenario on cash, we've said that this business raised $3 million prior to the start of the year, and they want to know how long will that $3 million last them. So we take each month, there's a change in cash balance based on the change in sales and based on the sales and based on the operating expenses, and it has an impact on cash. So we have the beginning cash, the ending cash. What we've done is we've just done a calculation to see how long until cash out. So you know how much runway. So that way you can communicate to external parties. Hey, we have, in this scenario, it's 27 months until we run out of cash. So we got to execute, and we need to be thinking about raising funds 6 or 8 months before that cash out date if we're hitting our numbers. If not, maybe need to raise more money, or we need to adjust our scenario. So all of this, I know this is a lot, but this is the granularity with which we want to think about our business. So that way we can give these numbers to our team, and the head of marketing can take this $5,000 a month budget and go spend it however they best think. The finance, legal, G&A, whoever's in charge of that part of the P&L can, can spend that money on the best service providers in the best way. That's pre-approved spend. So this results in the efficient, the, this results in efficient decisions being made from the team. And also it gets summarized to be able to communicate to external parties. So this document, whether on a summary detail level, or if you don't want to confuse you don't want to overshare, you can summarize this to just the groupings that we noted on the other page to show the total high level results, what the strategy of the business is, how you're going to get there, whether it's a lot of people, whether it's a lot of sales and marketing, whatever it is, but you can start the conversation in a more general way by summarizing it. So that's the model there, Larry. Anything that I missed? Or anything you want to add?
I think you hit on a lot of great things. I think the audience may want to know that every business is different, and the total lines and groupings here are not the only lines and groupings you could do, right? This is a general example. And so if your business is different and you need more granularity or more drivers, those types of things, of course, those things can be built in. But overall, yeah, this is the way to think about it. This is for like a venture funded startup style business or an angel funded business, startup business where you're losing money for a long time, right? But many clients and many businesses are actually going to be cash flow positive the whole way through it. Now, instead of showing losses throughout all these periods, they'll be working towards, showing a profit for all the periods.
That's right. Most businesses don't have the luxury of raising funds. So we need to figure out how you need to generate a profit from day one. And that would be a completely different scenario, but the exercise is similar.
Hmm.
How many do you sell on what period? How much cash will that bring in? And then what do you need to spend to support that revenue? So the lines will be different, but the exercise and the thought process is very similar. So this is our template. We're happy to chat through it with anyone who's interested. Please reach out to me if you'd like to talk through modeling or like to get more information on our model. I'm happy to talk through it, but we will continue with the rest of our model, how this actually, our webinar, how this next step is how this model actually gets used and put it. I'm going to share a different screen here. Yes. All right. So we just did the case study. So Larry, this is your section.
Okay. So how to use the budget. So once the budget or the model is completed, in the top right quadrant, it says load it into the accounting system. So by taking this budget and loading it in, matched up to the accounting system's chart of accounts, then we're going to be able to run reports regularly to share with the relevant people on your team, or maybe just you as the owner, that can say, well, what was the budget for the first quarter? Or what was the budget for January? And say, well, what did we actually do? And then get a variance on that. And then what you want to do is let's assume for all these discussions, you're in a team. Okay. But obviously it could just be you, but you want to share that with your team and then use that to hold everybody accountable. And so, you're going to go to your marketing and your sales team and you'll say, hey, we said we were only going to spend $5,000 a month on marketing. This month you spent seven, why? Or maybe we'll put controls in place so they can't go past five next month, or maybe from the beginning, right? So you get to have these discussions with people on a regular basis so they know where they stand. There's a comment here about potentially using extra dimensions in our accounting system, locations or departments, whatever. We can break the budget down into those components so that you can have, for a larger business, it may make sense to not just look at the business as a whole, which you can do, but also look at it, by a certain department head is responsible for a certain department budget. Whereas maybe the CEO and the CFO or the whole leadership team is responsible for the overall budget and budget to action reporting. And then this goes into setting up performance and expectations, right? So it's all about, in anything in life, whether it's with your spouse or whether it's in business or with a customer, whenever expectations and reality are pretty far apart without a discussion about that, people are disappointed or they can even be upset. So the closer you can get to having expectations and reality be the same, the better the better everything's going to be, right? Nobody likes surprises and nobody likes negative surprises. So anyway, I think that's really the best way to think about how to use the budget.
It's right. We'll actually show in a sample in a section in a second, but using the budget to actually hold people accountable and give them clarity on what's expected of them. So that way they can work hard to achieve it. I'm sure everyone that gets a budget wants to achieve it. And the biggest thing that we mentioned at the beginning is it really helps that they're part of the decision making process. No one likes to be just handed a budget that was decided without their input, and so involving that team in the build up is really important and can go a long way to help you achieve those goals that you're setting for the team. So, next slide is just what it would look like in the accounting system. Larry, what are we looking at here?
All right. So what you have here is actually an export from Sage Intacct, which is a mid-market ERP that we deploy. So it's kind of like QuickBooks Online, but it's a big brother of that. Okay. And what we can do here is similar to what we can do in QuickBooks, but we can do even a little bit more. And so what you see here on the screen is a small component of a report, just looking at revenue, your cost of goods sold, and then your gross profit. So what's not here is your operating expenses below that and that income. But you see two different groupings, well, really three. On the far left, you have account types or groups. In the middle, you have what was December 2023 actual versus budget. And then it was over, under, and a percentage over, under. And then also year to date, since it was December, it was the entire year. What was the year to date from January of 2023 through the end of the year, budget versus actual? And you can see in this example, revenue outperformed in December and outperformed for the year, which is really kind of fantastic. And you can kind of see those percentages. And so this would be obviously a great time to sit down with the manager for this company and say, hey, you know what? Like, we really blew it out of the park versus the budget, or maybe tell them we should probably do a better job trying to budget next year. Like, figure out why did this happen?
Right. And, we started this talk about with the intro, financial planning and analysis. The first section of this entire speech or this webinar was financial planning, building that financial plan. But by uploading the budget into the accounting system, it allows you to focus the analysis on, on a deeper level. You don't have to spend the time to pull together a budget in Excel with the actuals in Excel and compare this. This can be done automatically through accounting and through accounting software to allow the analysts, the FP&A analysts, to get the information they need and start asking the important questions a lot sooner and to get the answers that you're looking for a lot quicker and at a deeper level. So utilizing the technology to elevate the level of analysis and provide that analysis much quicker can completely change the game. So Larry, one more, you mentioned
This is the same report, but now we're just looking at the accounts that are below gross profits. These are operating expenses, but the exact same thing. And you can see here that expenses in December last year were just tremendous versus December of 2023. But for the year, expenses did exceed the prior. Oh, this was not budget. This is actually this year versus last year.
Yep.
December 2022 versus December 2023. And then year to date, 2023 versus 2022 and a change called. So this is another way to look at things, right? You can look at actual versus budget and then actual versus prior period or last year in this period. And these are both very important things to look at to try to understand trends in the business. It also is helpful for just the accounting team to identify potential errors, right? Maybe something's posted in the wrong spot or something wasn't understood, but a very important tool when you start to get past bookkeeping and move towards accounting and analysis.
That's right. And, this is where having a really, really strong relationship between the finance team and your accounting team can make a big difference. And that's really what FP&A, financial planning analysis is. It's that bridge between the finance, which only thinks forward looking and strategically, and accounting, which looks backwards and puts things into the accounting buckets. It's that bridge. And so we talked about strategic finance at the start of this, talking about how that gets utilized and how that helps the business move forward. It's reports like this and insights, simple things such as simple as color coding changes that are out of expectation can help someone focus in on important variances, whether that's the accounting team or the finance team, to make quick decisions. We see on this one, year over year, utilities grew by $91 million, which seems like a big number. Depending on whether or not they expected that or not, it could cause a lot more work to be done to drill into, hey, maybe they have a leak somewhere that they didn't expect. Maybe some rates change, which change the model, change the business plan going forward. So it's really that connection between the accounting team and the finance team that is necessary for every business to help make those decisions, help set strategy in the future, and to help achieve the goals that you set out for yourself. So
We do
there,
have one question, Jeff, which I think you may want to try to adjust. Well, actually, there's two questions.
sure.
Let me do the first one. The first one says, I'm amazed that businesses or that many businesses can budget well, but most individuals budget poorly. Why do you think that is? I mean, I think it's because in business, oftentimes we'll spend time and focus on this exercise. Sometimes we just won't dedicate the effort
That's
to
right.
to trying to figure that out. Maybe it's more emotional personally, what you want to do. But the next question I think is a good one for you, Jeff, which is how do you recommend executing your model on a go forward basis instead of a look back review of the P&L every month? So how do you keep the model updated
Yep.
continuously? And if you could talk about that process.
Yeah, I think that's a great question. We mentioned previously some software. There's software solutions out there that help do this. We've experimented with a few of them, none that I'm really comfortable mentioning on the call, but I think the purpose of looking at or doing the budgeting, it should be a quarterly exercise. I think doing it monthly might be a little bit of overkill because the facts are changing so frequently. But I think starting with what actually happened with numbers that are as up to date as possible through the most current months. So you can look at trends and then using that information and projecting forward through the rest of the year or through the next 12 months is a good exercise to be done a quarter. Looking at things that we looked at in the budget, such as what are your revenue trends? How much are you earning per month? What are your growth rates on revenue? And then the corresponding costs associated with that. Have the input costs gone up? Do you need to include another supplier or vendor that you didn't think about in COGS? Does your team need to travel more? You found that you need to invest more in sales and marketing than you originally projected. Doing that in Excel is something that's really not such a, it's easy to do, but it can be time consuming. There are software solutions out there that plug directly into the accounting system that are reading your data regularly. That if you put in your assumptions using growth rates or number of the cost per employee, they can update Adam automatically just by having the integration. So there's a couple ways to do it. It just depends on finding a solution that's right for you. We do it in Excel. We've used software solutions, but recommend doing that on a quarterly basis.
Awesome. Perfect. Okay. So if people want to get more information, how can they find you? And what's the best way to go about doing that?
Sure. So you reach out to us. This is a QR code that takes us to our contact page. If you send us a submission on there, it goes directly to me. I'll be sure to reply to you with any questions or reply to you with answers on any questions you submit. I'd love to chat with anyone who's interested. Also, we're very active on all social media. LinkedIn Live, obviously, is how most of you are watching us now. We also have social media pages on YouTube, TikTok, and Instagram, and Twitter as well, posting multiple times a week, useful information for entrepreneurs and business owners to help optimize their business. And so we'd love to get in touch there as well.
And then lastly, just a quick note for everybody. We implement accounting systems. We run accounting systems. We can become your back office accounting team or augment your team. We can help you create these financial models or interview your team and actually be the ones that push all the buttons and create this.
We just lost Larry there for a second, but if you're having any problems with accounting or you want to upskill on your accounting front, we'd love to talk. We also build financial models for clients. We'd love to support you wherever you need. So reach out and we look forward to talking to everyone soon. Thanks.